Hello and welcome to a discussion on the end-of-period adjustments made by an accountant. These adjustments are also called adjusting entries. After viewing this video, you'll be able to recognize transactions that are recorded through routine procedures and automatically using the computer system. You will explain why adjusting entries are required and be able to explain the thought process the accountant goes through to identify the adjustments that must be made. You will also be able to explain the difference in an unadjusted and an adjusted trial balance. Accountants have standard procedures in place that use documentation and inputs into the computer system to record transactions that happen repeatedly while doing business with customers. Entries related to providing goods and services to customers, purchasing assets, and receiving services are part of the routine day-to-day activities of the accounting department and are made when different employees in many areas of the company enter items into the computer system. Let's talk about what happens to ship goods to customer. An order is received and entered into the computer system. The customer service rep enters the order, or the customer directly enters the order online. Next, the warehouse receives the order and prints a pick ticket that lists the customer information and the items that must be shipped to the customer. Warehouse personnel pick the items off the shelf and pack them in a box ready for shipping. When the package is shipped to the customer, warehouse personnel enter a ship confirm into the computer system. The computer system has record of the price to the customer and the cost of inventory and automatically makes the journal entry to record the sale. Revenue is automatically recorded when the goods are shipped to the customer. The customer is invoiced when the package is shipped. The customer name and account then automatically add to the list of amounts owed by customers. This list agrees to the total amount in the accounts receivable account. The customer pays the company in approximately 30 days, and the accountant enters the receipt of the check as payment from the customer, and the computer system automatically makes the journal entry to show cash received and the customer does not owe. The computer system automatically makes the journal entries in red after employee input into the system indicates the transaction has occurred. For services provided to customers, an order is received and entered into the computer system by the salesperson or customer service rep. Employees provide the service to the customer and enter a confirmation into the system that the service has been provided, and also enter the price of the service. The computer system automatically records the service revenue and accounts receivable when this confirmation is entered into the system. The customer is invoiced after the service is provided. The customer name and amount is automatically added to the list of amounts owed by customers. The system automatically records the service revenue and the accounts receivable owed by the customer. When the accounting department receives the customer payment, the accountant enters the receipt of the check into the computer system, and the journal entry to increase cash and decrease accounts receivable is automatically made by the computer system. The entries in red are automatically made after employees enter data into the system. Costs for assets and expenses are also recorded using the computer system. Goods or services required are identified, and the responsible functional manager places an order with a pre-approved supplier. The company then receives the goods or services, and an invoice is received by the accounting department. The accounting department sends the invoice to the responsible functional manager, who verifies that the goods or services were received and authorizes the invoice for payment, and then sends the approved invoice back to the accounting department. The accountant that processes payment is called the accounts payable clerk. The name of the supplier, the invoice number, the due date, the amount, and the account name that will be reported, will be either an asset or an expense name, is entered into the computer system. The computer system automatically creates a journal entry to debit the account name entered by the accounts payable clerk and credit accounts payable. Entering invoices and selecting the account name is a critical step in the accounting process. All assets and services purchased by the company are recorded by the accounts payable clerk with this step. Checks are then printed and mailed to the suppliers. The computer system automatically enters the journal entry to reduce cash and reduce accounts payable when checks are printed. This process records the majority of assets and expenses for the accounting department. The journal entries in red are automatically made by the computer system after data entry. The transactions related to providing to customers, purchasing assets, and receiving services, along with cash received and paid, are referred to as original transactions. Almost all original transactions are recorded automatically by the accounting system after the employees enter information into the system. Many people believe that the information system makes all the entries and wonder what the accountant does since the computer system does it all. The accountant must record transactions that the system does not automatically make as routine procedures occur. These transactions often involve the exchange of cash in a different period than the revenue or expense occurred, or transactions that have no actual physical exchange during the current period. These other transactions often have a significant impact on the amounts reported on the financial statements. Entries that are not original entries are called adjusting journal entries. Adjusting entries are made to record transactions the computer system does not automatically record during the period, or no documentation was sent to the accounting department. Adjusting entries are made at the end of the period, which is a month, a quarter, or a year, and before financial statements are prepared. Transactions are not recorded during the period if cash was exchanged in a different period, an input was not made to the computer system, or there was no invoice or documentation sent to the accounting department. Take a moment and read through the most common reasons that accountants need to make adjusting entries to record transactions. These are all transactions that have no documentation that goes through the accounting system to automatically record an entry. The adjusting entries are made to record the transactions that the computer system did not automatically record, or cash was not exchanged in the same period as the revenue or expense occurred. The accounting department records all entries that change cash during the period as it occurs. After making adjusting entries, all accounts should be correct. Correct means that the value for assets is what the company actually has, and the value for liabilities represents what the company actually owes on this date. Correct also means the value for revenues is for all goods and service provided and expenses incurred during this particular period. Adjusting entries are made to get account balances correct. The unadjusted trial balance is used to determine what adjusting entries need to be made. An unadjusted trial balance is simply a list of all accounts and the current balances. This is prepared after all of the original entries are made at the end of the period. The accountant looks at the assets and asks if any of the assets have been used and not recorded. The question related to all liabilities is, are there missing liabilities, and has the related interest expense been recorded? Accountants review invoices received after the period ends to make sure that all goods and services that were received in the current period are recorded. If the company has investments, the accountant must make sure that all interest and dividends earned during the period have been recorded. Sales must represent the value provided to customers during this period, and the accountant will check billings in the first few days of the next period to make sure that all revenue earned in the current period is recorded currently. They will also make sure that unearned revenue is still unearned. Expenses are compared to prior period for reasonableness. The accountant must use their knowledge of the business to identify values that are not correct and need adjusted. Take a moment to review a quick summary of what the accountant looks for to identify accounts that must be adjusted. The adjusting entry is made to change the current balance of the account to a correct balance. Certain accounts tend to go together, and when you adjust one, the other one also changes. Let's review the most common reasons accounts need to be adjusted and the list of accounts that are typically adjusted together in the same entry. Adjustments are needed to reduce assets because the asset has been used during the period. Adjustments are also needed to record services received by the company in the current period when no invoice was received and payment has not yet been made. Adjustments are needed to record revenues that were earned during the period and have not yet been recorded. The accountant records the adjusting entries and posts them into the T accounts to get a final balance. The list of adjusted accounts with final balances is called an adjusted trial balance. The adjusted trial balance accounts and amounts are reported on the financial statements. After viewing this video, you should be able to recognize transactions that are recorded through routine procedures or automatically using the computer system. You will explain why adjusting entries are required and explain the thought process the accountant goes through to identify adjustments that must be made. You will also be able to explain the difference in an adjusted and an unadjusted trial balance. Please go to studymyaccounting.com and go through practices you learned for examples of each of the adjusting entries discussed in this video. Then work out the practice test to verify your understanding and check your answers to the answers provided. Please write it out and work through them. It'll really help you get it. Thank you for being prepared for class. It is much appreciated.